guys, how are you? I hope you all guys are good in good health. Uh, Today our topic is the Motley Fool Stock Advisor. I hope this video is very helpful for you because it helps you for your future, for your present, and which can motivate you this video for your business, and you can get extra benefit from this video. And first of all, you should like, subscribe and share this video if you can. If you can like, subscribe this video, and if it can motivate me and I make more videos for you. And then now it's time to start our video. The Motley Fool investing philosophy. Okay, now we start this. Yeah, Wall Street just declared victory or inflation, and that's the key points. Inflation readings have been continued to moderate, with the October's reading CPI coming in flat. The stocks market and the bond market react with the optimism and the future. If the US economy holds up, a new bull market could finally be around the corner. Motley Fool issues rare all in buy alert. Go down. Will the Federal Reserve spoil the party? For the past couple of years, investors have had to deal with the microeconomic factory they had previously been able to ignore for decades. Inflation, ghost of a global issues combined for properly is it skyward, and people could clearly feel the impact when they went to the grocery stores, car and dealers, partially everywhere. Also, the broader economic outlook was thrown for the loop and officially, and the Federal Reserve response with their most aggressive monetary tightening companion in an over generation. Growth stocks stumped a decline that played a key role in 2020's bear market. However, However, the news of Washington Tuesday appears to have been led investors to conclude the inflation in recession is no longer a serious threat, with a major market benchmarks climbing 2% or more to Tuesday morning. Wall Street appears ready for what could become a massive end of the year stock market rally. Here's how a single report on the consumer's price index led so many investors to decide the inflation is down for the court. Go down. And the CPI news Wall Street wanted to hear. The headline new numbers from October's CPI report were impressively begun after a signal adjustment. The primary CPI reading came in unchanged for the month, filtering out after a somewhat steep 0.4% month-over-month rise in September. On a year-over-year basis, the CPI is now 3.2% higher than it was 12 months ago. That was lowest growth level in the several years, at its worst level of 2022. The CPI growth briefly climbed above 9%. As often happens, energy provided the biggest climbing inflation on the CPI for the month. The gasoline price fell 5% in October, offsetting increasing in other areas and pulling the overall energy index down 2.5% for the month. Food prices were up by the modest 0.3%. Many economics prefer to calculate largely on the so-called core CPI figure, which excludes volatility for energy prices. Core CPI rose by 0.2% October, with the variety of varying factors affecting price. Cost for loading used cars and trucks, communication services and airfares fell somewhat, offsetting price hiking elsewhere. That brought the core CPI year-over-year increase down 4%, smallest increase since September 2021. The impact on the market. Financially, market celebrated the inflation because news bonds yield fluctuated, with the yield on the year 10-year treasury falling below, and rates on the intermediate term treasury bonds dropping by as much as a fifth of the percentage point. Huge moves in the usually boring and bond market. Stocks whose futures are tied mostly closely interest rates are also sold, with the real estate select sector SPDR exchange traded funded climbing by exchange 5% and 6% as a midday Tuesday. Morally bold high growth stocks that were previously humbled by rising interest rates posted solid gain. The negative composite index picked up the more than 2% and equal weight version of the negative index outperformed the market capitalization weighted version of the benchmark. Stocks with the closest rise of the real estate housing were among the moorings. Storm winters with the Zillow Group Z 10.90% and ZG 10.89%, seeing the notable rebound or more than 11%. That's the graph. Is the bear market over? Stock market bulls have been hoping for more signs that the Federal Reserve would end in its interest rate hiking campaign. They are generally talking the October inflation report as evidence that the Fed can now turn its attention back for supporting the economic. Yes, yet it's still not out for the question on that Fed could deal a market surprise. Yields on a short-term treasury bills remains between 5.25% and 5.5%. In effect, expect the central bank will rapidly cut benchmark interest rates if the current higher rates are held steady and lead to more economic strain, and then this market rally could prove short-lived. Nevertheless, for now, most impressive appears to have a more positive outlook on the market near terms, perhaps if consumers are able to back up the belief with growing spending efforts as their budgets get tighter. Then they could finally deliver the definite bull market and that many in Wall Street has expected for the long term. Do not miss the second chance as a potential liquidity opportunity. Ever feel like you missed the boat is buying the most successful stock that you will want to hear this. On rare occasions, our expert team of financial issues a double down stock recommendation for the companies that are about to pop. If you are worried you already missed your chance to invest, now it's the best time to buy it before it's too late. And the numbers speak of themselves. Netflix about 23,878% since we doubled down in 2004. Amazon up 1,506 506 since we doubled in 2010. And Apple up 3,383 since doubled in 28. Now it is the time to over the video. If you like this video, please like, subscribe and share this video. Okay, bye, goodbye. Okay, guys.